Hey guys, Doug the Retirement Guy here. We have a new series we're starting off with. It's called Monthly Paying Dividend Funds. 45 different funds we're going to be reviewing over the next 30 days. Hey, today we're doing the Agree Realtor Corporation ADC. Now, we're not excited because we got a 4.01 yield on this fund so far. Um, so we're going to look deeper into this one to find out, is this really worth having in your account? When we look deeper into it, Agree Realtor Corporation, this is a REIT, and the company own and operate a portfolio of 2,400 locations across 50 states, and they have over 50 million square feet of leasable area. And this just blew my mind when I looked deeper into this, that these guys are really going after the real estate, um, basically getting retail tenants. So they're really looking at retail in most of these places. And some of the buildings and properties they're purchasing and buying, and then they're doing a lease back to the companies, which definitely makes sense. But you got a ton of money tied up in properties that you're collecting rent on and moving forward. So with all that, I still think the dividend of 4.01 was definitely a low number. So when we started looking deeper into the company and into the holdings that they have, we started finding some impressive stuff. Walmart's, Dollar General's, Advance Auto Parts, Aldi's, Taco Bell. There was a bunch of tire stores. We couldn't go all post all 2,400 of them, but you get an idea. They have some major power behind them that are not just going to get in today and get out tomorrow. They are long-term operations. So we feel very comfortable that the holdings of the 2,400 are spread equally and ultimately over many different markets and very solid. So I can see why they're in all 50 states. So let's explain what a REIT is and the advantages of it. First off, a REIT is a real estate investment trust. And simply put, it's a way to anyone to become an investor in a real estate. So if you want to invest into warehousing space, if you want to invest in the office buildings, if you want to invest into retail stores or railroads or all different kinds of things, you can actually find REITs that are dialed into this. Now, the REIT return is the biggest thing why I love REITs, is because they are required to distribute 90% of their profits back to shareholders. So all those rents that they collect and all the operations that they have, 90% of every dollar that comes into them has to go back out to the shareholders. Diversification is another big one. Is you're not putting all your eggs in one basket. As you can see, even with this one, you are spread along Walmart and Aldi's and Taco Bell's. You can spread out if you want to have some office complex, and if you want some warehousing complexes, and you want some retail operations, you can find REITs that does all of that. And then, of course, the performance of a REIT. Over time, over the last 25 years, REITs have actually outperformed the S&P 500 and other corporate bonds. So they're a great source of long-term income and investment. So this is why we kind of facts why we love REITs across the board. So back to ADC, they advertise a 4.01 return. As I've told you already, and probably got it, I'm not real excited about a 4% return when you can get pretty much right now 4.5% on most of your money market funds. So to get me excited, what do we got? Well, over the past 10 years, they have steadily grown their dividend by about 2%. Their stock value return has rocketed over the past year, 29%, and over the past 5 years, 19%. So this thing is really taking off big time with evaluation, which is now telling me why the dividend has dropped, because the stock price has dramatically gone up from when they started. Now, of course, because this is part of our monthly dividend project, they pay a monthly dividend, which you know here on the channel we love is the regular cash flow. Money coming in at the end of the month or beginning of the month so we can pay our bills and live comfortably. Other options you can do is reinvest your money buying more shares, more stocks, and growing. ADC in the 1 year, you can see back, look all the way back, July of 2024, this thing was selling for right around a $60 price point. You are now over $75, $15 increase. Now you're seeing the huge increase in the stock price. 1 month, it's been up 6.71. 6 months, it's down 0.51%, which is not bad. Year to date, they're up 8.14. 1 year, 29. 5 years, they're at 16. You can look at the chalk mark. March was not really much affected to the fund. April, again, tariffs affected everybody. It scared everybody. They dropped out. But look how fast this one recovered and rebalanced itself back to where it was before, which basically says great organization, well managed, operations are fine. It's not tariffs are going to cause problems. They're going to continue doing forward. So it's a safe and secure fund. We look at the dividend chart. I love this because I can go back 10 years and see what was going on. And basically they were up to they were up to some higher numbers. And then they got down into reorganizing, regrouping, doing the monthly payouts. And they've been pretty much smooth and steady at 20, but 25, that's hard to say, is 0.256. So just a hair over a quarter a share per month. And here's where you see it. This is where you're seeing the 2.4% growth in their dividend. Every one of the dots that you see above that one line is a positive. So they've been positive since 2022, solidly giving you increases in their dividends. So as the profits increased, they're paying them right back out, which is what we expect from a growing organization. $10,000 invested into this back in May at $58 with about 171 shares. If you take a look at that all the way up to 1 year later, you would have a 30.57% gross in the value of the stock, or a $3,000 gain. Now, we were able to show that you're able to get 5.19% in the dividend return over the past 12 months. Partially because of the increases that we've seen in the dividend, and you're balancing out because of the stock price. So basically, we're getting a 35.76% return on this stock as a whole. We look at the chart, and we see ADC is a very smooth, steady flow. But here's the one thing that it starts to soil me again. It's going to that 4% dividend, which we show that we got 5. Let's use that number. We got 5%. But the price of the stock, the average was over 52 weeks was $41.41. This stock now is selling at $76.19. So my question is, how much higher can this stock go? And where is it going to go from here? And you're buying at the top end. So we put this in your retirement account as a hold. And the reason for that is the price of it is so high, I'd rather see you take the money that it would require to buy this fund and buy another fund that would have a better dividend yield and pay out more dividend. So you're going to get more income. So we say, is it good for a retirement account? I say yes, because this thing is rocketing and going strong. But I would not be reinvesting into this fund. I would be holding tight on this fund. Now, as we said, the dividend, we got 5.19. They're advertising 4.01. If you understand yields are basically what's the annual dividend being paid. It's a good way of calculating it out versus the price of the stock. We use the actual dividend monthly payout to calculate what you're getting off of this program. A 30% gain in the NAV is great for a total of 35% return, The question is, are you going to be able to keep getting growth of 30%? Is this stock going to, 30% will be a $21 gain in the stock, and I just don't see it. That's why I tell you this is a hold. If you have it in your account, keep it. I would just be waiting for this one to see where adjustments come out, and we might have missed the train on it. But I would take my money and invest into other dividend stocks at this point in time. Guys, this is Doug, the retirement guy. I hope you like what we're doing. Give us a thumbs up if you like it. We're doing over 45 different videos on monthly paying stocks, so don't miss a single one. Hit that subscribe button. You really want to gain on this one. And also any comments. If you like it or dislike it, leave us a comment. Everything helps the channel grow, and we're hoping we can help grow your retirement income. We'll see you next time.